Hello, I'm Desvita.
I am Nadia.
I am Nabila.
I am Yudha.
Accounting? It's so hard to understand, huh? Financial statements, journals, ledgers, they all seem confusing.
What if we don't just memorize, but experience the process directly? Let's try to create a simple simulation project of running a mini cafe business. Starting from recording transactions, creating general journals, posting to the ledger, to compiling final financial reports. Let's get started. Step 1: Recording transaction. The following are transactions that occurred on the 1st, 4th, 7th, 8th, 10th, and 15th. Second step. On the 1st, there is a capital deposit transaction from the owner in the journal with the cash balance increasing in debit and capital increasing in credit, each by 10 million. On the 4th, there is a credit purchase transaction for supplies in the journal with supplies increasing in debit and accounts payable increasing in credit, each by 2 million. On the 7th, there was a transaction to purchase coffee powder in the journal with merchandise inventory increasing in debit and cash decreasing in credit, each by 500,000. On the 8th, a coffee sales transaction occurred in the journal with cash increasing in debit and sales increasing in credit, each by 250,000. On the 10th, there was a dessert sales transaction in the journal with the cash balance increasing in debit and revenue increasing in credit, each by 400,000. On the 15th, there was a transaction for payment of electricity expenses in the journal with the electricity expense balance increasing in debit and cash decreasing in credit, each by 100,000. Third step. At this stage, we group the accounts in the journal into the appropriate accounts in the ledger. The first is the cash account consisting of transactions dated 1, 7, 8, 10, and 15. With a total balance on the debit side of 10,050,000. Inventory account consisting of the 7th transaction for the purchase of inventory. With a total balance on the debit side of 500,000. Equipment account consisting of the transaction dated 4 for the purchase of equipment. With a total balance on the debit side of 2 million. Accounts payable consisting of transactions dated 4 for the purchase of equipment. With a total balance on the credit side of 2 million. Capital account consisting of transactions dated 1 for capital deposit transactions by the owner. With a total balance on the credit side of 10 million. Sales account consisting of transactions on the 8th and 10th for coffee and dessert sales transactions. With a total balance on the credit side of 650,000. Electricity expense account consisting of transactions dated the 15th for electricity payment transactions. With a total balance on the debit side of 100,000. 4th step. The next stage is to create a trial balance by listing all accounts and the amounts in their respective normal balances. The debit and credit amounts must be balanced. 5th step. The final step is to prepare financial reports. First, we calculate the profit and loss report to find out the profit or loss experienced by the company by reducing sales by expenses. Next is the capital change report. Here we add the initial capital with the profits obtained from the previous report. The last one is the balance sheet. On the left side adds up all assets while on the right side adds up debts and capital, and the total of both must be balanced.
At first, I was really confused about accounting. It felt like it was just numbers and complicated memorization. But after we started the simulation project of running our own business, I started to understand.